Welcome, everybody. Thank you for joining us today. My name is Manuel De Luque. I'm founder and CEO of Block Asset Management. Today, we are presenting in this webinar the digital assets more than just Bitcoin. I would like to introduce the three panelists, which are basically team members of the Block Asset Management team. And before that, I just wanted to do a little housekeeping before we get started. Just for your information, the webinar is being recorded and we will share it in the next couple of days to all of you and also the people who couldn't attend. If you have any questions during the presentation, please type them into the Q&A and we will be answering them obviously at the end, but maybe we'll fit them into the presentation. Okay. Finally, I would like to say that whatever discussions in this webinar cannot be considered as investment advice. This is more for educational purposes. And without further ado, I would like to turn over to Kevin to start with. Kevin, can you please start with a brief introduction of who is Block Asset Management and what do you do?
Of course I can. So thank you for everyone for attending. Good day, good morning, good evening. I'm not sure where exactly the attendees are in the world, but I do hope everyone is safe and well during these testing times and are looking forward to the festive season. As you can see, I've gone for the festive background today. So yeah, just as a brief intro, Block Asset Management are a Luxembourg specialist, digital assets focused alternative investment fund manager. That's a mouthful. In fact, we were the first AIFM to be registered with the Luxembourg regulator, the CSSF, which took us almost a year to get approval. So that's the sort of process that we had to go through. And therefore, in January 2018, we launched the world's first digital assets focused fund of funds. So the aim of that fund of funds was to reduce volatility in the crypto space by giving diverse exposure to investors through a single entry vehicle. So there's no denying the asset class is a high risk asset class, but what we look to do is to remove unnecessary risks in the space.
Okay, so Kevin, that's interesting. But what do you mean with unnecessary risks?
Unnecessary risks. Well, if you think about the team that we have, I mean, the team comes from varied backgrounds in traditional finance, so Credit Suisse, Julius Baer. So when we were putting together a due diligence process, we had to put together two DDQs, if you like. So we had to use a traditional due diligence process and questionnaire, and we had to create a due diligence process for the crypto space. So you can imagine there are a lot of differences or areas that don't exist in the traditional space that exist within the digital universe, if you like, or the crypto space. So, you know, we look at, if we look at the traditional world first, we look at what we would call, we look for red flags. So does a fund have an independent administrator? Does a fund have an annual auditor? Does the fund's team have money management or fund management experience? So, you know, any of these areas, if they're not met, then that would be a red flag that, you know, we just feel that that particular fund, no matter how it might appear, we've looked at some funds from the offset that look fantastic. You know, performance is fantastic, documents and literature is fantastic, but when you lift the bonnet and kick the tires, there's nothing of substance there. So, you know, they don't have an administrator, an audit, a team with any reputable experience behind them. So any of that would deem to be a red flag. But then we have processes that are unfamiliar to the traditional investment world, if you like. So we have questions over storage of assets. So we have hot storage, or storage online, which would be used during trading hours. Then we have cold storage, so where assets are physically removed from the internet, so they can be stored and protected. So, you know, these are areas that do not exist in the traditional investment world, but we have to be very vigilant and adhere to. So we need to know who has access to the storage, how assets are stored, and we're so thorough that we even request independent verification of assets held. So if a fund states that they have 3,000 Bitcoin and 50 Ethereum, we need that confirmed by the independent administrator, not by the fund manager. So, having that kind of transparency means that we can work with that particular fund or product provider. And, many people in the space were not happy to provide that information. Therefore, it's a red flag, and they were out. So to give you an idea, out of about 250 funds vetted to date, we have only invested in 14.
Okay. So that's interesting. So basically you act as a risk filter for the investors, and basically you pick up the most interesting funds in the space. Is it enough diversification, Kevin, within this asset class, being such a new asset class? Do you think, have you found enough diversification into the space?
Yeah, I think in the early days that was a concern of ours. When we entered the space and doing our due diligence late 2016, early 2017, that was a bit of a problem and a concern. Not so much how many funds there were, but how many would pass meaningful due diligence. It may surprise people to know that as we stand, there are in excess of 1,000 funds in the digital asset space. And whilst a large portion of them are focused primarily on Bitcoin and Ethereum, and the strategies that account for most of them would be trading and arbitrage or quant strategies, we ourselves have actually identified 6 strategies within the digital assets ecosystem. And if I could just share my screen, here's the first test now to make sure we run smoothly. If I can just pop in here, and if I share screen, you should be able to see now that we have the strategies that we identified here. So we have index tracking. Okay, so that's a long type exposure or direct exposure. We have infrastructure, so exposure to companies generating income. The sector within there might be the mining sector, for example. We have blockchain related listed companies, so companies that are heavily focused on blockchain technology and putting that to use. We have venture capital and private equity. So some of you, maybe if we were doing this presentation 2 years ago, we might have referred to that as ICO or STO investment. So that's very much changed now. And that venture capital and private equity is that investing in the tech startups, in the new tokens and rising opportunities in the space that, whilst we don't select them, we invest in some of the world's biggest and best funds that have the teams and track records of locating and investing in those best new projects. We also have, as I said before, the common strategy of trading and arbitrage, which is something everybody will understand. And then the last aspect here, as we see in the bottom right, is the lending aspect, which is a thriving sector within the digital asset space itself.
Okay, so basically, summarizing, in your investment, you will not only invest in Bitcoin, which is basically what a lot of people relate crypto with, but you are allocating to different strategies, as you have shown here, with different funds, different managers. Excellent.
Yeah, so we look to take the holistic approach and invest in a very diverse basket of 6 strategies, and within those strategies, we find the best managers within those particular sectors.
Okay, perfect. Excellent. Okay, so Kev, if you stop sharing, oh yeah, stop, yeah, that's okay. Okay, interesting. Seeing that, what I would like to comment, I mean, obviously having seen those 6 strategies, I'm looking at the last one, that's quite interesting one on the lending side, as people normally don't relate crypto to lending. Okay, so I would like to drill a little deeper on those strategies. I would like to start with lending. Aaron, can you please explain how can you generate passive income within the digital assets?
Yeah, sure, Manuel. So hi, everyone. So maybe just before jumping into the passive income, I just want to go through again the normal strategy that investors have been using so far. So, all the investors, they all have this old, buy and hold strategy. He has been extremely profitable for everyone who jumped on the boat very early. But since 2017, December was the all-time high, as the former all-time high, we've seen that this strategy has been a bit challenged. Another strategy which was very profitable was obviously the day trading. When you trade on a very volatile asset, you can generate a lot of profit. But at the same time, it's, like I said, it's volatile. So if you're not really ready to stomach the ups and downs, then it's better not to go into those risky strategy. So on the other hand, we have passive income. So we have staking. I don't want to go too deep. I just want to stay at the really basic level, just that we all have the same understanding. So what staking means. So basically staking is really locking your crypto asset in a proof of stake blockchain for a certain period of time. And with those locked assets, you use to achieve the consensus, which is required actually to secure the network and to validate every transaction that has to be written on the blockchain. So in most cases, you don't really have to do anything. You can use your crypto wallet. So that's the good things, you know. And nowadays, you even have platforms like Binance or brokers like Bitcoin Swiss, which offer you the possibility to actually stake your holdings.
Okay, so if I understand correctly, Aaron, technically staking is the process of actively participating in the transaction verification on a proof of stake blockchain. Is that correct?
Yeah, that's absolutely correct, Emmanuel. And financially, the idea, it's when you stake, you get a reward for the contribution to the network.
Okay, so then what can anybody, or what can I stake?
Well, when we talk about staking, we have to mention Ethereum 2.0. So obviously, that's the one that everyone who's involved in crypto think about. Yielding so far is around 15%, but we expect to see down to 6 to 4%. Then you have as well Cardano, yielding at 4.75%, Tezos, 5.5%, and you have Polkadot yielding around 13.5%. So you see all that cryptocurrencies, you can stake them. And there's plenty of other cryptocurrency that you can stake. There's many websites that you can go visit and see what you can stake. So there's about 150 cryptocurrencies which is offering a yield with an average of 10%.
Okay, so basically this is like holding those cryptocurrencies and having them in a savings account and getting rate. So how are these staking rewards, what are they called, calculated?
Well, that's a little bit the problem, you know, it's crypto, it's not straightforward. So I can't give you a short answer, unfortunately. So every blockchain network, they use a different way of calculating the staking rewards. But I mean, even some of them, it's on a block by block basis. But in short, what you have to take into account, it's how many coins the validator is staking, for how long do you stake actively, how many coins in the full network. Then you have as well the inflation rate, and you have many other factors.
Okay, interesting. Right, so within the, what we call the lending strategy of the fund, is there any other way that an investor can generate income within the ecosystem?
Yeah, absolutely, Manuel. So staking is quite technical, but there's the lending. So lending is also a completely passive way to earn interest on your cryptocurrency holdings. There's nothing to do. You just need to go on a peer-to-peer lending platform, which allows you to actually lock up your fund, again, for a certain period of time, and then you just collect the interest. And when we talk about lending in our strategy, we see it as a fixed income strategy, you know, like in a traditional portfolio. And really the aim of the lending is to reduce the volatility.
Okay, so how does it work, this?
Well, it works like in the financial institution. You have the lenders who are earning the interest, and at the same time, you have the borrowers who need or is willing to borrow. And for that, you just need to put in deposits his cryptocurrency as a collateral. Okay. And then it's a bit similar as the staking. You will receive the interest rate. It can be on a daily basis, on a monthly basis, even on a yearly basis. And basically, again, you can use the same platform, Binance, Bitcoin Swiss. They will take care of the matching for you.
Which type of rates are you looking here? Is that something very profitable, or it varies as well for what you just said?
Yes, it's again very profitable. Talking about Bitcoin is around 5%, but it's really depending on the assets, and it's also depending on the platform. So what you have to understand, basically, it's the income that you make is really depending, first of all, on the size of your holding, on the length of the loan, and on the asset. But in short, more you have, more you got.
If I could just jump in there and interrupt, guys, just bringing it back to the fund perspective, you know, the lending aspect and area here basically acts, as you mentioned quite rightly, Aaron, as a fixed income aspect to the fund. So what it will do is it will provide the fund with a steady return in any given market direction. So, we talk about reducing volatility. One of the main ways that we do that, of course, is through diversification, and having this sort of fixed income aspect means that whether the market is rising or falling, we will be having a steady return, or we're able to achieve a steady return through this particular aspect. So the lending aspect is very important for our fund.
So you, Kevin, you also rebalance your portfolio according to market conditions then, no?
Yes, so we're not passive. So basically, if the market is extremely bull, then we might reduce exposure to this particular asset class within that we've identified. So the lending exposure may reduce, or at times when the market is falling or the market is particularly bear, then we might increase our allocation to have that steady income from the lending sector. So we do look at that on a monthly basis.
Okay, so that's interesting. And an interesting point, Kevin, what you mentioned before, that you have 6 strategies within the fund. I mentioned that there is a lot of people out there that they still see, when you mention cryptocurrencies or digital assets, they only see Bitcoin. You mentioned that there are over 1,000 funds in the space, and they, it would be very interesting to explain the audience how much broader is the ecosystem and not just Bitcoin, and how currencies or tokens differ from each other. Danny, could you expand on this, please?
Yes, hi everybody. Daniel Bege here. Welcome to the seminar. And like we like to say, is we created a traditional fund for a non-traditional asset class. So we try to translate everything in plain vanilla, and actually is what people do in order for everybody to understand. The same happened with the space. I mean, there are hundreds of projects, there are hundreds of companies. It's like the traditional space, but as soon as you hear blockchain of crypto, people get blocked and they cannot relate. And actually, everybody is a human being, and people behind these projects are very human. So, and the systems and the rewards are very human. So like any company, if you go to the stock exchange or the stock market, you have traditional companies that cover all the space and all the services that we get today, And in the crypto space is the same. You have companies. I mean, you have to differentiate Bitcoin from Ethereum, from Ripple, from Tesos, and from Polkadot. Is like in the traditional space. IBM is not the same as American Airlines, or is not the same as Bank of America. One is a software company, the other is a bank. In the crypto space, is not different. They just use the crypto and the blockchain in order to secure information. But at the end, they try to provide a service. And this service can relate principally or mainly in the financial industry, because it's the first part that is going to be disrupted. But every industry is going to be benefiting from the blockchain. So even airline tickets, even software services. But in the crypto space, the same. I mean, it's important that everybody understand that Bitcoin is not the same like Ethereum, and we will explain further, and in the tokens, because at the end everything is a token, we divided there in 3 main categories. Like the transactional of payments, like Bitcoin or cash. This is a unit of economics. These are transfers or unit of value. Then you have security tokens, like a stake or ownership in a company. And you have utility tokens or platform tokens. It's a service. You receive a service by getting these tokens or providing these tokens. And lately, also another important token or service that has been emerging is the governance. So in many of these companies and traditional companies, or these blockchain companies, or any, there is a governance that you need to manage, And these government tokens, they provide decision-making protocols, voting rights. Do we implement this? Yes or not? Do we vote this? Yes or not? So these are the main sectors that you have in the token space, and there are hundreds of companies that try to cope with this sector. It's like the banking industry. There are hundreds of banks. It's in transportation. There are airlines, many airlines. It's like in any industry, there is the leader, and in the cash payments and the unit of economic, the leader is Bitcoin, but it's not the only one. In the utility and platform, the leader is Ethereum, but it's not the only one. And in the ICOs, okay, taking the ownership of a company, there are many companies. So it's important that we go away from Bitcoin and we start looking into the projects and platform, no? Like Ethereum. Ethereum is a platform, is a computing, is a decentralized computer, and there are many applications that are going to be put in there for us to benefit, you know, and smart contracts and those things.
Okay, so basically, what you are saying, Daniel, it's
too much information.
A massive world out there. It's not only Bitcoin, as the title of the webinar, no? That is a massive world out there within this ecosystem. Now that you just mentioned the smart contracts, Danny, can you explain a little bit to the audience what is a smart contract, and tell us a little bit more about this Ethereum or Ethereum 2.0? Tell us a little bit more about it.
I mean, within the space, you know, you have Bitcoin, that is unit of economic or unit of value, and then you have a platform, and the most important platform of software provider is Ethereum. Ethereum at the end is like operating system, but not centralized. Like if you start looking into Google, Android, IBM, or even Apple. Apple is a software provider besides hardware, and you run applications on top of the iOS of Apple. Okay, Ethereum actually is a blockchain that connects computers and gives you computational power. What do you need computational power for? To run programs. If you run programs, you can run programs that do something, or you can run what they say is smart contracts. Smart contracts are executive software that you can program, and they give you a solution or a conditional. No, you can execute these conditionals within the blockchain. Also, it's very important. I mean, I like Ethereum a lot because the problem of Bitcoin is very not only the Bitcoin is the blockchain. Many people don't understand the Bitcoins, the rewards, how everything was created. It was anonymous. You have this guy that is Satoshi Nakamoto, and he's a Mython, and suddenly nobody trusts. No, Ethereum actually, you know the founders, you know the developers, Vitalik and Joseph Lubin. They are well-known people. They created this company. It's run like a traditional company. Actually, the main office is here in Switzerland, and they want to update the software, and they have voting rights. And the people just a few years ago, last year, they vote to upgrade the ecosystem to be faster and to be more robust. And this is what they do. They run. You can run applications on top of the Ethereum program, like you run application on top of the EOS, like in Apple. No?
That's a good example. So seeing that example, I mean, and talking about Ethereum, so for the understanding, Ethereum is not a digital currency, it's more like a platform. So how do you determine the value of Ethereum?
Okay, yes, it's a very good point. Actually, Ethereum has his own payment unit, that is the Ethereum cryptocurrency. This is how you pay the validators, and you pay the people that manage or keep the software running. For company is like Apple, more apps in the software in the App Store, more value has the App Store. If you have more people using the App Store, then the value of the software company is greater. So actually, Ethereum as a decentralized application or a decentralized computer, now we see that 40–45% of the applications are running on Ethereum. Let me maybe I would like to share you a nice indication on the ecosystem. I mean, now you see my screen?
Yeah.
Yeah, okay. Now in Ethereum 2.2, these are all Ethereum is in the system, and imagine 45% of all the applications that now are people building to solve problems, to solve real problems. That this is very important, real economy, real payments, real insurance, real applications, they are running on top of the computing power of Ethereum. And this is going to determine the value of Ethereum. And that's why also we are very positive on the value of Ethereum, because now is the reference of the decentralized computer and is the most known, and many of the applications are running there. You know, it's a very nice example. You can put a Bitcoin into the network of Ethereum and the transaction is faster. So nowadays, people transfer more Bitcoins on Ethereum than on the Bitcoin blockchain. Why? Because it's faster. So then Ethereum and Bitcoin has value, both. Ethereum because is the application, and Bitcoin because you can transfer faster.
Okay, interesting. So
I don't know if it's too much information.
no, it's good. It's good. Obviously, we have to assimilate a lot of the things, but yes, it is very interesting. So can you put some real life examples of these applications, these Ethereum uses?
Yeah, I mean, there are two main. I mean, the first thing that Ethereum and the blockchain wants to disrupt or to change usually is where the money is. And the money is in the financial industry. So many of these applications are being targeted at the financial and insurance services, no? Insurance or the financial industry, for example, or even the supply chain, no? Like fraud. This is a very good case. Like imagine in the supply chains, all the service providers, all the people that work in a supply chains of any product of handbags or meat or whatever, you put the provider in the blockchain. Since this cannot be changed, then you have proof that this is not fraudulent. Or for example, in the insurance company, you have to pay premiums or liabilities if depends when the merchandise is going to get or your product is going to get to certain port in Manchester. So every day that is the merchandise is delayed, you have to pay fees. You can program this contract in the Ethereum and it will pay automatically. Therefore, your legal fees and your insurance fees goes down. Imagine that you have to run hundreds of legal fees or legal programs or merchandise, then your fees will be lower. So many people are using these smart contracts in order to lower the cost, because you will not need so much legal cost in your services.
Okay. So Danny, all this that you have been discussing has been focused a little bit on Ethereum and Ethereum 2.0 with the upgrades and so on. But are there any other projects? I mean, obviously we see thousands and thousands of cryptocurrencies or projects. Are there any projects or tokens that stand out, that are leaders in their specific fields nowadays?
For sure. I mean, another field, another aspect that many people want to disrupt is the payments. And many people will know maybe from the name Ripple. Ripple XRP actually was born. It's a company based in California. The founder comes from Yahoo and other financial and software companies. And what they try to target, very simple, they want to target and to change the SWIFT payment system. And Ripple is trying to fight and battle the traditional payment system that is taking very long. To send money from New York to London, it can take 2 days, but to send crypto from one bank to another, it can take few seconds. So Ripple is a company that built a blockchain protocol for two parties to be trusted, and on top of the blockchain to send fiat currency. And this is what they try to do and to disrupt the payment protocol. So, and this is a clear example of another payment provider. And within the payment providers, there are other companies that try to do the same, like Ethereum or Ripple, no? And these are very well-known projects, no?
Okay, interesting.
Can I jump in there as well, Danny? Just
Yeah, sure.
From my perspective, there's a particular one I've been researching, and obviously I find very interesting, which is VeChain. probably not as well known as many of the other tokens or currencies that people might have heard of.
Correct.
And the reason I like that so much is its real world usage. So again, just as you've explained, that XRP is very, very different to maybe Ethereum and these smart contract platforms, because it's, again, solving a real world problem of moving money from A to B instantaneously at low cost. Now, VeChain is a blockchain platform designed to enhance supply chain management, if I've got that right. What I mean by that is initially it was used to prevent fraudulent goods and ensure that the products are not fake, but it's more recently being used to track goods globally, whether that be anything from what you eat to what you drink to what you wear, even the cars that you drive. So it can track goods from the very factory, farm, or even individual that produces goods, and to the consumer. So I mean, this is a great example of how blockchain technology revolutionize industry and be widely adopted. So that particular, I think VeChain is a great example of how we can put blockchain technology and bring it to industry, if you like.
Okay,
real cases, yes, yeah. Correct.
Yes, I mean, obviously the audience, if they are not very familiar, they are going to see a lot of coins, a lot of interesting examples. But one of the words that is very popular out there, especially in the crypto space, but obviously also moving to the traditional space, is a word that is the stable coins, that we all know that's a stable coins. Aaron, can you please give us a kind of explain to the audience what a stable coin is, and just give one or a couple of examples on them?
Yeah, sure. Well, it's clear stablecoin has been in the mouth of every investor, in the mouth of the central banker, even in the mouth of Jamie Dimon from JP Morgan. So everyone is talking about it, from corporate to supranational. So a stablecoin, it remains a cryptocurrency, but the idea is to have a cryptocurrency which is stable and it's also backed by an asset. So basically with the stablecoin, it's an attempt to offer the best of both worlds. So you have the instant processing and the security or privacy of the cryptocurrencies. And on the other hand, you have a bit the volatility-free, stable from the traditional world with the fiat. So I think the most known stablecoin is definitely USD Tether or USDT. So that's a stablecoin which is pegged to the US dollar. And it belongs, or the company who's actually in charge of USD Tether is Bitfinex. And I guess everyone knows Bitfinex. And you have other, I mean, it doesn't have to be backed only by currencies. It can be backed as well by gold. And another quite famous one is Pax Gold. So like the name indicated, it's a digital asset backed by gold, basically.
Okay, interesting.
And also maybe just to mention, you can also use those stablecoin as a collateral when you want to lend. So if you go on Bitfinex, you can lend USD Tether at roughly 13%, which is not that bad for a cryptocurrency pegged to the dollar.
Okay, so in a real example, that will mean that I change my traditional fiat US dollars to the stable coin USDT. Then I deposit in a peer-to-peer exchange. I lend my USDT, my Tether, and I get 13%. Well, I know that this rate varies, but I get 10, 12, 13%. That's annualized, and you can lend from a day or couple of days to a long period. So that's a good way of getting return. Interesting.
Absolutely. And the only risk that you have basically is the risk of the platform, the risk of Bitfinex.
Correct.
And maybe as well to mention, the interest rates is also a good indicator of what the market is thinking. When the lending rate going high, it means people are willing to borrow US dollar to invest in crypto. So that's also an indicator for anyone who's willing to have sort of an idea where the market is going.
Okay, so linking this to a little bit to the financial sector again, there is another phrase or word, I'm not sure how to define it, that a lot of people here in the audience will have been hearing in the last months, which is DeFi, okay? Danny, can you explain to the audience what DeFi stands for, and can you expand a little bit on this?
Yeah, so very, very interesting. And I came back to the financial industry, the first industry that is the blockchain is going to disrupt or is going to target to make it more efficient. At the end, is to make it more efficient is the financial industry. That's why many of these applications that are not controlled by one system, for example, the applications on the Apple or the iOS are controlled or are managed by the operating system of Apple. So, and the applications that are run in Ethereum on other applications, they are decentralized. Nobody controls, nobody will tell you not to execute, and nobody can turn off the application. So that's why they are calling decentralized applications. Decentralized applications are, at the end, is a movement to leverage decentralized networks to transform the traditional financial products into trustless and transparent protocols without intermediaries. No, it's a long statement, but at the end, you trust more into the system, into the program than into the provider. No, and this is what they are trying to do. I have here a small presentation that can tell you, DeFi, decentralized finance versus centralized finance. These are the two concepts, and it's not necessarily that everything is going to be decentralized, but sometimes you prefer a market rate that is not manipulated versus a discretionary market rate. Okay, you probably, sometimes you want your custody to be centralized, and sometimes you want your custody not to be decentralized. And these are the real applications that the blockchain programs and applications are targeting nowadays. No, and you can see they are trying to decentralize many all the spaces in the finance industry. Sorry, so it's not only the technology, it's not only the interest rate or the transfer of ownership. So these are specific blockchain applications that are trying to provide a service that is not centralized, but is decentralized. Uniswap was very famous because this is a marketplace that execute orders without central consensus and generates an execution on all the marketplaces and tries to find the best price. Suddenly, you don't need a centralized broker. Suddenly, your order goes to a program that tries to find the best price. So this is very revolutionary, and many people are afraid. No? And this is what is happening right now. And again, like we mentioned before in the other presentation about Ethereum, many of these applications are running on the Ethereum blockchain. That's why we believe these new technology, these new platforms and infrastructure is going to create a lot of value.
Okay. So what we have seen today at the moment here is just a lot of things. I mean, it's a quick introduction on the different strategies that Block Asset Management identify, some examples of some of the strategies and some real cases, especially talking about that is not only Bitcoin, but some examples that we have been seeing here about the lending, the Ethereum, and different other strategies. I would like to conclude somehow asking you, the three panelists, Kevin, Danny, and Aaron, I would like to ask you a brief overview of 2020, what 2020 has been, and just, you have a minute just to give like your predictions for 2021 to the audience before we jump to the Q&A.
And now, can I go first? Because I'll cheat. I want to focus predominantly on 2020, if you like, because I normally want to steer clear from predictions. So yeah, I mean, there's no doubt 2020 be remembered as the year of the pandemic. But to those in this industry, and by that I mean the digital asset space, it'll certainly be remembered as a breakthrough year for digital assets. Obviously, a lot of that has led to down to the pandemic. The fact that we've seen money printing and quantitative easing at levels never seen before. An interesting article I read a few weeks ago, I don't know how true it is, but it's certainly an interesting article that said that 22% of all US dollar in existence was created or printed in 2020. Now, I found that astonishing, but then when I think about it, and the quantitative easing that we've seen this year, it's not really that surprising. We've got a debt to GDP ratio or a debt to US dollar ratio that are at levels that we've not seen since the Second World War. So, I mean, where am I going with this? This is just putting into question the value of fiat currencies in general. And that has in turn acted as a catalyst for digital assets. So, you know, it's been almost a perfect storm for digital assets. So we've seen companies like MicroStrategy invest a large portion, initially 250 million, I believe it's up now past 425 million of their reserve capital into Bitcoin. And, you know, the announcement this week that I read was that they're launching a bond to raise more capital, and that that capital will be going into cryptocurrency as well. So, you know, big companies like that are getting on board, but also probably more pertinent is certainly to the global retail market is PayPal. You know, a payment giant like PayPal supporting a number of digital currencies. So that was announced a month or two ago that they will be supporting, if I get this right, Bitcoin Cash, Ethereum, and Litecoin initially as the 4 currencies that they will allow their customer to transact with. So that is really bringing cryptocurrency and digital assets to the mainstream. You know, that in itself was probably the biggest piece of news that we'd seen for mainstream adoption. And yeah, really just to say that it's the tip of the iceberg. You know, it's just the start. You know, it's 2021 is going to be, you know, an even bigger year in my view, and a view shared by many. A huge year for digital assets. And if I close with a comment that I will borrow from the Winklevoss twins, I watched a webinar with them yesterday, and it was actually the presenter that said, data is the new oil and blockchain is the new barrel. And I thought that was very good and very apt. So yeah, looking forward to 2021.
Okay, thank you, Kevin. That is quite interesting. Basically, update on what has happened this year and what to look forward with. Danny, what do you think about 2021?
I mean, we like to be positive because otherwise this is a very volatile market. But I mean, we not only the predictions and the professional players are coming to the space and having a good forecast. No, I mean, I would like to share with you, for example, this is one of the funds that we invested, and this was a presentation that they did in June this year about networks, about different currencies, and they projected, this is the curve they project for Bitcoin. No, this was in June, and they already here they say, look, I mean, they base their assumptions in a very fair value formula that they create, and they say that the end of 2020 Bitcoin is going to be 20,000, and they also say that it's going to be 50,000 and 100,000. And even here, I mean, if you take these guys, this is the head research, one of the from Bloomberg. They tell you that they do several analyses, and they already says that Bitcoin will get to 50,000. And 1 trillion market cap. So it is important to say, I mean, another aspect that I would like to share is very important for all of us is, I mean, we are at the beginning of a revolution. We are at the beginning of an industrial change. So it's important that you buy and you hold and you try to participate. And this is not because it's 20,000 is too high. It's not because 50,000 is too high. I mean, compared to the traditional market, I mean, I don't want to name Amazon, Google, Facebook, and these companies that they participated in the last revolution. But we are at the beginning. And we always say it's important you participate in a diversified structure, in a product that you feel comfortable with several strategies. And we are at the beginning. So let's try to ride. And besides that, these guys, they say 50,000. It's important that we participate, and this is what we try to do. No, 50,000 is many people say Bitcoin is going to get there very fast, and also Ethereum. Ethereum now is 600 or 500 something. 1,000, 2,000 of Ethereum also is a valid number. No, if all these applications goes into the network, the network will have a lot of value. And these are values that we see. But also in the private equity space, there are many company formations, there are many companies that are going to be providing an important value and an important solution, no? And this is what we try to provide access to this new asset class and revolution. So we are very bullish, but besides saying numbers, we are very bullish into the space.
Okay. Thank you very much, Danny. Aaron,
not only professionally, but personally. We are invested.
Aaron, can you give us a little bit your thoughts on 2021?
Yes, absolutely. So I'm joining Daniel and Kevin in their assessment. I mean, 2020 was a very competitive year, especially if you look at all the protocols. You have Polkadot, Cardano, Dfinity, Ethereum, and there's so many brilliant minds working in those projects, and it's actually very difficult to do your own due diligence. So I would say, you need as well to diversify a little bit. Don't put all your eggs in the same basket, Have a look, ask question. Really, don't be afraid of asking specialists what they think about this and this protocol, because they're very technical. And if you zoom in, there's so much granularity in every protocol that it can take you, months and years to understand all of them. So that's the first thing I would say. And of course, we all bullish on crypto. And of course, we all happy when we see Bitcoin at 20,000. I'm sure it's not the end. And also what I would like to say is that I have seen at Falcon, the appetite has clearly changed. I would say that 17, 19 was still the year of awareness, 19 was, and 20, the year of education. But now I really see that the clients are mature. They're asking not for question anymore. They're asking actually for which product to invest. They ask about certificate. They ask about fund. They ask about fund of fund, derivatives. So I can clearly see now that there's a true appetite for this asset class, and it's just the beginning.
Okay, now that's interesting seeing that appetite. Obviously, the institutionals are coming. That's all over the news every day lately. So some of you, maybe Kevin, you can answer that question. But what is the appetite from your side as a fund, from the institutional investors or the high net worth individuals into the fund? Have you seen kind of an increased interest on the investments lately in the last 6 months?
Yes, is the answer to that. Undoubtedly. We've seen investments start to flow from institutional investors, family offices, even other fund of funds looking to dip their toe and cover the crypto space as a sector within their normal fund of funds strategy, if you like, or more traditional strategy. And that sort of came within the last, I'd say, 4 or 5 months. The fact that Blockchain Strategies Fund is now listed with Clearstream Banking has been a biggie. And we're seeing investment therefore flow from private banks and from institutional sources that use Clearstream. I think it's worth noting as well that these investors are not looking at current market conditions, and a bit something Danny touched on there really, in that they're not worried that Bitcoin or any other crypto is close to record highs. They're looking at the space and they're not trying to time the market, because they know that's it's near impossible, particularly in this asset class. It moves just so quickly. They know that they need to be invested in the asset class, and they know that we're in the early stages of the crypto asset class. So therefore they are seeking long-term exposure, not worried about current market conditions. They just want the right product. And even the most professional of investors and the most well-educated in traditional assets are keen to admit that they don't know too much about this asset class, and therefore a diverse fund of funds entry is the way in, and then they will educate themselves during that process. The one thing that they all agree on is that there is a clear long-term opportunity presented by digital assets, and we are just at the start of the boom, if you like.
Okay, so I have a question related to this, as you just mentioned. I have a question sent to me by email by one of the attendees. Is it too late to invest right now? Is it a good entry point?
Who's that aimed at? I mean, I think I've kind of covered that there a little bit in the way that they're looking. Does anyone want to tackle that one?
Yeah. Danny?
I mean, and as I saw before, and we have this very clear in some of our presentations, you know, this is early stage. And many companies are building the infrastructure, and their solutions are coming to market in the coming years. And this is how the value is going to be derived. I don't think, I mean, even in the traditional space, nobody could think about Tesla or Amazon or Apple or these companies and not see, I mean, question sometimes and not see the value they are bringing. No, in the crypto space, the same. Many people question the price because they don't understand the value they are going to provide. But if you see, gold has 13, 14 trillions of capitalization and Bitcoin not even 1 trillion. If we take as a reserve currency 5 or 10%, the value of Bitcoin should be 250,000. So just imagine, and this is one part of the ecosystem. If Ethereum starts decentralizing many of the protocols that we mentioned, this will have an immense value proposition. So what we try to say is, look, try to participate. This is the beginning, and we should not be afraid. We, I mean, at least in our strategies or in the personal level, we invest every month independently of the price because you want to participate. And this is, you know, you have to have an asset allocation in your portfolio. We recommend between 2 and 5%, and you have to participate in this new emerging asset class. And this is what we say. Independently, when you see the numbers, they are very, sometimes it's difficult to explain, but the value in the ecosystem is just at the beginning. So certainly our point of view, or my point of view, is not about timing. You are mute, guys.
Yeah, sorry, Manuel, can I take your job for a moment? And I just saw questions come in. One's come from, obviously, my good friend, Nicholas. Hi, Nicholas. And he mentions there that, does Blockchain Strategies Fund have plans for weekly dealing, as 1 month is a long time in crypto? Obviously, he's then gone on to kind of answer it in a way, but I'll tackle this one myself in that, you know, because we have the different sectors within, and if we look particularly at VC, PE style investment, those investments are truly illiquid, and you're investing in tech startup and you know, new projects and fintech projects that take a long time to come to fruition. But the returns on those investments, when you select the right projects, can be phenomenal and substantial even. So they cannot be weekly dealing. They can't even be monthly dealing in some circumstances. You know, normally there would be a tie-in anywhere between 1 year and 5 years on the institutional funds that we invest in. And we're talking, you know, the world's biggest names. I can name drop Pantera, for example. So, you know, we invest in the biggest names in the industry. And, you know, when you're going into those particular projects, particularly VC, PE style, there is, you know, they just cannot be daily or weekly liquidity or even monthly. So there's a selection of them that we've managed to negate to quarterly redemptions. We do not have to be held to the 1 year or even 5 year lock-in periods that are normally held for investors. So, you know, we can get in without those lock-ins, but a weekly dealing fund would just not work because we have those aspects within the fund that just make it too difficult to do. So as a fund of funds, we invest in a number of funds that are monthly dealing. And because the underlying funds, and there's a spread within, some daily, some weekly, most are monthly dealing funds, and therefore we receive the NAVs from the majority of the underlying funds on a monthly basis, and therefore we can only create our dealing dates and our NAV on a monthly basis, which I can answer the following question, which is coming anonymous, which is just, can you give an example of a liquid trading strategy you're investing with? So the most liquid portion would be our tracking exposure, and there are many trackers out there of Bitcoin, Ethereum, you know, the long exposure via top 5 cryptos, top 20 cryptos. So obviously we have to find the right ones with the right managers, with the lowest fees, with the best teams. So they are highly liquid in daily trading, but we do have some trading funds that can also be quite highly liquid, but they would typically be weekly as opposed to daily liquid. Anything to add on that, Manuel?
No, that's totally right. Obviously, we have to add the quant funds as well, but that will be within the trading. So, that's all clear, Kevin. I mean, that's answered that question. I think, oh yeah, there is another question here. You think you have a better Sharpe ratio versus BTC? Okay, that Sharpe ratio question is just complicated. I mean, BTC is like comparing apples with a vegetable garden, okay? Maybe the Bitcoin is going to do better, or the whole space is going to do better. We don't know what is going to be better, no? That's why we believe in diversification. Bitcoin, we believe, and all the experts believe that Bitcoin is here to stay. However, there is a lot of things coming. This is a new ecosystem evolving on a daily basis, and it's just new things coming up on a daily. So we don't know in 2-3 years' time where will Bitcoin will stand out. But what we believe is we have to be on top of the market. We have to see and invest in the new projects coming up in the space. So that's why, having seen the summary today of the amount of things happening in the space, I think diversification is key. Bitcoin versus all the other asset classes or our fund, complicated. We are not, it's not our benchmark Bitcoin. Okay, what we have is we invest in the ecosystem in as many and the 6 strategies that Kevin mentioned before. And I think, that's a little bit overall. I think to give you a clear understanding of what we do, I would like to show you to finish the presentation.
Manuel, before you do that, can I just make, I jibbed out of the predictions before. I didn't make any predictions for 2021. So can I just say this, which kind of ties in with that thought of, I guess the question was down the line of, the angle coming from was, why not just invest in Bitcoin?
Yeah.
And the peaks and troughs that you get with that. But the prediction I'll make is that there will be at least 50 tokens that will outperform Bitcoin next year. And by outperform, I mean percentage gains over the year. Okay, so Bitcoin might go from 20 to 50. Okay, but in terms of percentage gain, the percentage gains on that, there will be tokens out there that will go from 10 cents to $10. Okay, so when you look at, do I only gain access to Bitcoin, you're going to miss an awful lot of uplift that will happen next year. And I will go as far as to say that the returns from Ethereum, which obviously Danny has talked about quite a lot, whilst they will be tremendous, I also believe that market share will be taken from some of the other exceptional projects that are coming out, the likes of Cardano and Polkadot. And I believe that those two particularly will probably have a better percentage return next year than Ethereum as well. So it's not always about investing in the largest by market cap, because those largest by market cap might be more stable, but certainly there will be more growth in unearthing some of these new projects that we have access to.
Okay. Thank you, Kevin. So to finalize, what I would like to do is, obviously, this webinar has been presented by Block Asset Management team. I would like to conclude the webinar with a quick video that shows basically a summary of what Block Asset Management does in a little cartoon video that is quite interactive. Let me just share it with you, please. 1 second.
We find ourselves at an opportunistic time with the emergence of a new and exciting asset class. Early cryptocurrency and blockchain investors have realized fantastic returns in a growing market. But this growth has come with elevated risk and volatility, and with subsequent growth in new digital assets and technology, making it harder for investors to keep up. There are now an increasing number of hedge funds within the digital asset space, but many do not pass meaningful due diligence. Finding the most reputable and investable funds takes months of research, and gaining access to them can cost millions of dollars and require you to lock in your money for up to 2 years, making them illiquid and inaccessible to most investors. Block Asset Management, the first crypto-focused alternative investment fund manager to be registered with the Luxembourg regulator, the CSSF, identified these problems and in January 2018 created Blockchain Strategies Fund, the world's first digital assets fund of funds. Investors benefit from thorough due diligence and risk management, which equates to expert fund selection. Blockchain Strategies Fund offers investors access to the best funds within the world's newest and fastest growing asset class, with some major benefits. Access to the world's best institutional grade crypto-focused hedge funds. Reduced risk and volatility through unrivaled diversification. Low minimum investment requirements. No lock-in period. Block Asset Management identifies 6 core strategies within the digital asset sector: trading and arbitrage, index tracking, infrastructure, lending, venture capital and private equity, blockchain-related listed companies. Via these 6 strategies, we can mitigate volatility and reduce downside risk. Blockchain Strategies Fund provides investors with exposure to a broad range of crypto strategies and managers, active management, monthly rebalancing and risk analysis, monthly dealing and liquidity. Block Asset Management is your fund manager of choice, acting as a risk filter to reduce volatility and unnecessary risks to provide a smoother investment journey through long-term crypto and blockchain market opportunities. For further information, contact us today at info@blockassetmanagement.com or visit our website at www.blockassetmanagement.com.
Okay, so I think, yeah. So thank you very much, everybody, for attending. I think this concludes.
Hello, everyone, and welcome to the
Oh.
DAM workflows from content creation to long-term storage.
Sorry.
What-
Hello? Apologize. Okay, sorry. Yeah, I just wanted to thank you, everybody, for participating. We will be delighted to having a call with any of you if you want to find out a little bit more about what we do, about speaking with any of us, Kevin, Daniel, Aaron, or myself. We are available. You can contact us via LinkedIn or directly via info@blockassetmanagement.com. And again, thank you for attending, and we hope you have learned and enjoyed the presentation. All the best.
Happy holidays.
Okay, and happy Christmas to everybody.
Thank you, everyone. Take care.
Okay.
Bye-bye.
Ciao.